Welcome back. And would you buy this sign? This sign was actually held behind Janet Yellen in congressional testimony a few years ago, and it just closed at auction for millions of dollars. We're going to be discussing that among many other topics, including Hedera blockchain. We're going to understand a new MetaMask integration with Hedera. There's been a lot of FUD about Hedera. We've been doing a lot of kind of analyzing to see if Hedera is a good investment for this upcoming cycle. And the more that we are learning about Hedera, the more I believe this actually may be the case, that it is a good investment. But we're going to be discussing that. I also have other videos coming out about Hedera. That way we explore the entire ecosystem. And we're also going to be talking about the CELO pivot and Ethereum's ETFs are currently in doubt. We got a lot to discuss in today's video. Make sure you guys are subscribed to the channel. Give the video an absolutely free thumbs up because it is free to do. It costs you $0 and it lets me know you guys enjoy this kind of content. So yeah, this is the infamous buy Bitcoin sign that was held behind Janet Yellen in congressional testimony. What would you pay for it? Because it just sold for $1 million at auction. And so, yeah, just another piece of Bitcoin history in the books at over $1 million. Proceeds will go to fund the development of Bitcoin Layer 2 Lightning startup Tyrell Corporation. Anyway, in other news, we're now hearing that Coinbase is paying their vendors in USDC. They're not just talking about the new financial system and creating the environment to foster a new financial system, but they're actually participating in the new financial system. Politico's Morning Money show, Coinbase's chief legal officer, Paul Grewal, announced that Coinbase has begun paying their vendors in crypto, saying unlike litigation, USDC is cheap and fast, no middlemen, no legalese, and no waiting. This is a snippet. It says Coinbase launches a new ad campaign. Coinbase, the largest crypto exchange in the US, is set to launch a $15 million ad campaign aimed at demonstrating how digital assets can eliminate payment fees. The firm is also set to announce that it begun paying their vendors in crypto. The announcement comes as part of the firm's efforts to demonstrate to policymakers crypto's use case, giving that quote again about USDC being fast and cheap. And we've been talking about this for quite a while now. This is going to make things, on the back end for Coinbase significantly easier. We've been seeing them transition to USDC over the last few years. And keep in mind, they do a lot of money transfers, money transmissions, money payments through the Coinbase ecosystem. And so going on board with USDC, which I believe that there's an investor or a supporter in somewhere on the back end there. I mean, this allows them to kind of bypass what the banks would charge, what the money processors would charge, et cetera, around the world. And so this is something else we have to keep an eye on because remember, Coinbase launched the Base blockchain, which they're making revenue from. They're also putting things on the Base blockchain, so it's cheaper for them versus on other blockchains with extremely high fees. Because keep in mind, they were footing the bill on a lot of those transfers previously. I mean, they were charging customers, but they wouldn't show the customer that they're being charged, $80 to send $10 in Ethereum. So what Coinbase is doing is creating constant revenue streams through all of these integrations that they're doing globally through their network and their partner networks like USDC that are making things faster globally and cheaper. And so this, I think, is going to be an interesting kind of journey to see where the Coinbase revenue goes, especially in this bull market, especially now that we're in the post-halving era. More adoption, more usage, right? We have more institutions that are buying in, and keep in mind, Coinbase is the custodian and the trading partner, right? The brokerage is effectively for many of these Bitcoin ETFs. So they're buying it and custodying it through Coinbase. So they're making money on that end. Now they're making money on Base. Now they're making money through USDC transfers, et cetera. And yeah, they're clearly, Coinbase is saying that things are going well because they're spending $15 million on NBA ad spend. Now, I'm not going to play the video because it has music in it and I don't want to get copyright struck. But basically, they say in the traditional finance, I guess we could play it, just sound off. In the traditional financial system, when you order a pizza, right, everybody's taking a cut from that pizza. The payment processors, the delivery fees, the delivery driver, everybody's getting a cut. And then on the back end of that, right, the people who are transmitting the payments to and from you, they're getting paid a little bit. The people who are paying the restaurant, they're getting paid a little bit. People who are paying the delivery people, they're getting paid a little bit, right? So everybody's taking a cut. By the time you get your end product, it's not what you really wanted, right? It's not, I mean, if we eliminated most middlemen kind of industries, this would, I mean, just think about the healthcare system in the US, right? Every single doctor's office, dentist, vision, any office has to have one person at least just to deal with insurance and how to code everything and how to send everything over and are we getting paid correctly? Imagine things were just seamless and there weren't middlemen everywhere trying to get their cut, right? And this is so effectively what their ad campaign is. And at the end, it says crypto moves money forward. And so Coinbase is doing this, right? They're using USDC. And so as we enter this new cycle, I think that we're going to see a lot more integrations of this new digital financial system with the traditional financial ecosystem. Anyway, moving right along, we're moving very rapidly in today's video. Don't forget to hit that subscribe button and also give the video an absolutely free thumbs up. We upload every single day. I have over 3,000 videos on this channel for you guys to take a look at. And if you enjoy this kind of content, click the join button down below to learn more about becoming a channel member right here on the Cryptoviser podcast. So Tomb Technologies, which describes themselves on X as our mission to, and contribution to the world, is developing self-owned identities that aid in blending online and physical realities to benefit all of humanity. They wrote on X, you can now use the Hedera token service and atomic swaps on MetaMask with snaps. We are thrilled to unveil the latest update to Hedera's wallet Snap, now live and ready to enhance your MetaMask experience. Now, we heard, before we go into like what this actually means for Hedera, just this past week, we heard, news that there was a BlackRock fund that the ownership was tokenized on the Hedera blockchain. And there's a lot of back and forth whether BlackRock knows about it, whether BlackRock called for it, whether Hedera is actually tokenizing a fund that is a BlackRock fund or not. I mean, all of the analysis that I have done seems to be that the ownership, that this fund manager that buys this money market fund, that they're tokenizing that ownership for their clients on the Hedera blockchain. I didn't read anything about BlackRock calling for this and Larry Fink saying we need to get on the Hedera blockchain. I didn't see any reporting about that at all. And so we're going to be doing a separate video on a recent interview that another YouTuber or influencer, I don't know, did with the CEO of that ArchAx company, that is the company that tokenized the ownership of this fund on the Hedera blockchain. And we'll hear a little bit more about what actually went on. But either way, right, I think this is a lot of other ecosystems realizing that they have not kept up. They have not kept up. What have I told my viewers? If you guys have been watching my channel for a long time, you know through the whole bear market, we were saying this consistently. Kept saying, guys, there are a lot of blockchain ecosystem and projects out here. Some of these projects are building right now. Some of them are pretending they're building, and some of them are not building at all. The companies and the projects that are building, these are going to be success in the bull run. And how are we going to know which ones we're building in the bear market? I'm going to tell you, it's so easy. The ones that are deploying now in the bull market, right? Not the ones that are saying that they're beginning to work on technology, right? Think about all of these AI cryptos, right? Oh, Fetch AI, Ocean Protocol, and Singularity Net, they're going to be merging into the artificial superintelligence coin. Okay, but that means that they're starting effectively from zero on creating products, right? If they did this 2 years ago, that would be a different story, right? They would have 2 years until the bull market to actually create products and create things that people can use in the AI realm. If you're merging at the beginning of a bull market, right, the merger is supposed to be happening in May this month. Then they have to kind of get all their ducks in a row, get all the developers kind of in line with this new code base, whatever the code base is going to be. What if these companies were already developing products? Now they may have to recode things to get on the new ASI crypto blockchain or whatever. Who's going to determine where the funding comes from? Who's going to, like, there's so much still that needs to be figured out that I'm not saying it's not going to do well in this cycle, the ASI crypto or any of the AI cryptos. What I'm saying is I personally would prefer to invest in protocols that are a little bit more advanced than that because we're in the bull market. So if they're beginning to figure things out now, it's too late, right? And so we're seeing a lot of ecosystems starting to freak out, a lot of freaking out, right? Internet computer is an ecosystem that is deploying AI technology, and this is sending shockwaves around the rest of the crypto ecosystem, especially in the AI sector. Near protocol, same exact thing, right? People are making fun of the Near protocol because on their X page, they posted a picture of the NVIDIA CEO touching the arm of the Near protocol co-founder or something like that. But like they're basically showing you that the Near protocol is clearly having those conversations with NVIDIA. Like, why else would that be a big thing, right? And so these other protocols, they're like, oh, ha 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 ha, NVIDIA, he's just touching the arm. That's the only thing they have. It's like, I don't think so. I don't think they would have just posted. And then they doubled down and showed something else with the NVIDIA CEO or whatever. Bottom line is, Hedera, I think, is viewed as a threat to some of these other ecosystems out here because Hedera is getting interest and excitement. And by the way, they have been building, like based on my research, like there is a community that has been out there. And there's a lot of you guys have been saying for a while, Cryptoviser, you got to do a video on HBAR. So here's the videos on HBAR. Did I miss the boat on HBAR? I don't think so just yet, because I do think potentially, right? We talked about this in another video that I did specifically on Hedera. I believe Aptos, I believe Hedera, Internet Computer, Polygon, and Near, I think these five have the highest likelihood out of the top 50 to enter the top 10 this cycle based on the narrative and the technologies that they already have ready. And we're going to get to Aptos in just a minute here, but let's understand a little bit more about what this means for Hedera. So Tomb Technologies said, with this new feature from Hedera Token Service, this release offers users unparalleled control and flexibility in managing their digital assets. Whether you're creating, transferring, or managing tokens, the Snap makes it simpler and more secure, opening up new possibilities for users across the Hedera ecosystem. They continue on saying, these features within this MetaMask integration will include creating, updating, transferring, deleting, minting, and burning digital assets, retrieving balances, obtaining digital asset information, freezing and unfreezing accounts, enabling and disabling KYC account flags, associating and disassociating tokens to accounts, pausing and unpausing digital assets, and wiping digital assets. And again, this is for token service. This is if you're looking to create a token for whatever you're trying to create a token for. I believe that we did cover that in the video that's going to be coming out, if it's not already out, called Exploring Hedera's HBAR. Is it a good or bad investment? So make sure you guys take a look out for that video. And it's probably already out if you're seeing this video. And don't forget to give this video a free thumbs up and hit that subscribe button. So Tomb Technologies continued about atomic swaps. They said introducing the feature that enhances the flexibility and efficiency of trading digital assets directly within the Hedera ecosystem. This functionality allows users to securely exchange assets through a straightforward API process. They continue on, saying by utilizing scheduled transactions, these swaps ensure that asset exchanges are completed reliably within a specified time frame, further establishing Hedera's wallet Snap as a versatile tool for managing and exchanging digital assets seamlessly. And you could read more on the Hedera wallet and MetaMask snaps on snaps.metamask.io. We'll pull it up so you guys can see it. This is just the additional integration. So you can access pretty much everything within this Hedera wallet. More expansion, more integration, and more cross-chain functionality. Now, talking about Aptos, which we were just talking about being one of the top 5 cryptos that I think have the best potential to enter the top 10 this cycle, the Aptos head of ecosystem, Neil, he wrote on X, imagine fading on Aptos. 30 plus games are set to go live this year. Last Salvation is just the beginning. And he posted this retweet to this game that is, I didn't know if there was going to be music, so I stopped talking to listen. So it says, just casually leaking a little sneak peek of Last Salvation's alpha version gameplay. And yeah, it's alpha, coming soon to Aptos. And so Last Salvation says, Last Salvation is a free to play multiplayer RPG crafted with Unreal Engine 5 coming to Aptos. And so, as you guys know, we've been talking about the AI narrative and the gaming narrative. And these two narratives are going to be huge because, again, building during the bear market, right? I mean, one of the other games that we talked about is in the Cardano ecosystem called Cornucopias, right? And it's a racing game. But that game has nothing on this. I mean, look at how advanced this is compared to what we saw in Cornucopias. And I'm not talking bad about Cornucopias because there's other games also that we've seen in other ecosystems that are not that good either. And this is just a small preview. And so I think that what we are going to see is this huge gaming release, and all of these blockchains that have been working on gaming, they're going to have to release their products. And some of these products are not going to be good, and some of them are going to be amazing. And remember, I believe Grand Theft Auto is launching in early 2025. And so these gaming ecosystems are probably going to be in on that hype. I would imagine probably it's a smarter idea for a lot of these games to release before Grand Theft Auto releases, because once Grand Theft Auto releases, that's the only conversation people are going to be having and the only game people are going to be playing, generally speaking. So getting these games out before that could potentially give them a boost from a financial standpoint if they have a coin related to them or in-game play or even the blockchain that they're being based on top of. So it's going to be really interesting to see how this whole cycle plays out. But yeah, I'm not sleeping on Aptos at all. Currently, I don't hold any, but that may be a different story by the time you're even watching this video. So make sure you guys do your own research before you make investment decisions, and don't make investment decisions based on what I say. Talking about tokens, A16Z Crypto. This is one of the large investment firms, Andreessen Horowitz. They recommend that startup founders never publicly sell tokens in the United States. Now we have venture capital firms telling these businesses, like, don't do business in the US, which is unfortunate, you know? They said public sales of equity and tokens outside the US and private sales of equity and tokens can all be done in a compliant manner without being subject to the registration requirements of securities laws. That's the general counsel at A16Z and head of decentralization. They said public sales in the US are an own goal, avoid at all costs. They explained that ICOs often met conditions of all US SEC Howey tests for determining whether a financial asset should be classified as a security. And so he said, nowhere is the application of the Howey test easier than with respect to primary transactions, like token sales, being the first to get the coin, right? How did you get that? In many ICOs, token issuers made clear representations and promises to investors that they were going to fund their operations with the proceeds from the token sale and deliver a future return to investors. He said those cases were security transactions regardless of whether the instrument being sold were digital assets or shares of stock. Case closed. And so, yeah, I mean, we've seen the SEC go after a lot of these, cryptos that ICO'd or IPO'd or whatever you want to call it. And they still don't, there's no clarity on how they could release their own coin in a compliant way, right? So effectively they're saying, like, if you're going to launch a coin, don't do it in the US. So yeah, that's Andreessen Horowitz. Now, we've been hearing a lot about Ethereum. The Ethereum ETF, CELO, has just recently pivoted to Ethereum. I'm extremely bullish on CELO as well. I mean, guys, there's so many coins that are deploying right now that it goes back to what I was just saying earlier. The coins and the projects that are deploying these technologies, it's very obvious at this point which ones are and are not. These are going to be the winners, and there's going to be the losers, right? And so the top 10 today is not going to be what the top 10 looks like next year. Guarantee that, right? It's going to look different. How different? I don't know. But it's going to look different. And so these projects need to be able to pivot, adjust, change, and move their strategy rapidly. And that is exactly what CELO is doing. After 9 months, the developers behind CELO have chosen Optimism's OP stack as the infrastructure for their project's migration to Ethereum. C Labs, which is the software company behind CELO, said that they'll be putting the OP stack migration up for a community vote, and if successful, the layer 2 would go to testnet in summer of this year, 2024. And so again, they've been researching in the bear market. Now they're putting it up for a vote. If it gets voted through, obviously we could probably see an implementation in a fairly short period of time, maybe by the end of 2024, which would effectively potentially put it in the midst of the hype cycle when we're potentially reaching the top of the market in 2025. We're also hearing about Ethereum Layer 2 Movement Labs raising $38 million for a move to EVM adoption. Through Facebook's Move-based Ethereum virtual machines, Movement Labs aims to enhance smart contract security and transaction throughput within the Ethereum ecosystem. So, Movement Labs' vision is to build a network of blockchains based on Facebook's Move programming language, and they bagged $38 million to boost a Series A funding raise. Their blockchain development team secured the funds in a round led by Polychain Capital and supported, by Aptos Labs, pay attention, Bankless Ventures, OK Ventures, and 8 other venture capital firms. Is Bankless Ventures the Bankless podcast, guys? If anybody knows, let me know down below. Through Move-based Ethereum virtual machines, Movement Labs aims to enhance smart contract security and transaction throughput within the Ethereum ecosystem. The co-founder of Movement Labs said that the re-entrancy attacks, arithmetic errors stemming from incorrect math within a contract, and faulty input verification are some of the most common vulnerabilities impacting smart contracts. According to them, Move EVM can help protocols fend off common re-entrancy attacks which previously affected major protocols like Curve and Kyberswap. The team estimates that smart contracts exploit alone resulted in losses of $5.4 billion between 2023 and 2022. So yeah, we'll see what happens with that. I mean, we know the Ethereum ecosystem has the most hacks out of any ecosystem. So if they can solve that, it's huge. Moving right along, EigenLayer powered Align Layer raises $20 million to make ZK proofs faster, cheaper, and this is all happening on Ethereum. And remember, ZK Sync just got integrated with USDC as well. More TradFi and DeFi combining. And so, and by the way, millions and millions of dollars getting pumped into Ethereum-based projects. Ethereum verification protocol Aligned Layer raised $20 million in a Series A to enable faster and cheaper zero-knowledge proofs on Ethereum. The fundraise was held by these people. ZK proofs refer to protocols in which one party can verify the truth of a statement to the other without conveying any further information about it. For instance, if you are doing a financial transaction and you need to know, does that person have more than $1 million in liquid wealth? And the person doesn't want you to know exactly how much they have. You could prove that you have over $1 million without revealing your wallet, without revealing your transaction history, without revealing how much money you actually do have, right? That's just an example. I don't know if that's exactly the implementation, but that's an example. Anyway, Aligned Layer aims to help engineers avoid bottlenecks in proving their code while making it cheaper to build applications atop Ethereum that use ZK proofs according to their blog post. They say, we verify proofs cheaply and quickly and post their results in Ethereum and any data availability layer that the developer wants, right? Let's say you go to a pharmacy, right? And you want to pick up your medicine and you don't want any of your other medication or medication history to be shown to the pharmacist, right? That's another example. Verify a statement is true without revealing other information about that statement, right? Yes, this person needs to pick up this medicine, but that's it, not why. Anyway, Aligned Layer is an EigenLayer actively validated service. EigenLayer is a crypto project focused on restaking where Ether is deposited as a security for the main blockchain and can be repurposed to secure other networks. And talking about Ethereum and Ethereum ETF, the SEC is expected to deny the Ethereum ETF in May. Now we're in May, so I do not believe that Ethereum ETF is going to be approved. And so, what are we going to see with the Ethereum price? I don't know, but there's a lot that's baked into this anticipation of the Ethereum ETF. So, as we approach the Ethereum ETF deadline, maybe we'll see a pump into it, or maybe after when it's denied, then we'll start to pump, right? Because then we're past that event. Buy the rumor, sell the news. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Check out my other videos by clicking the subscribe button and turning on notifications. I'll see you guys tomorrow right here on the channel. Crypto On.